All right, picture this. There's a spot called the Chart Cafe, and every Wednesday a group of traders gets together to talk shop. Well, tonight the place is buzzing because one of them, a guy named Rohan, thinks he's just stumbled onto something huge.
That's Rohan, and you can just feel the excitement, right? He's seeing what every trader dreams of, a little signal that seems to predict a market turn. Those tiny arrows he's talking about, they're called Williams fractals. And yeah, it really looked like they predicted the future. But did they really?
That's the big question his friends immediately started asking. And honestly, it's the perfect place for us to start. What is this indicator that has a knack for showing up right at these critical turning points in the market? So, to figure out what Rohan was so excited about, his friends broke it down to the absolute basics. And it all starts with a very simple but very specific 5-bar pattern. The first thing to get is that it's not about just one candlestick. It's a whole sequence of 5. Its entire job is to flag these moments where price might be running out of steam and getting ready to turn around. And everything, I mean everything, hinges on that third candle right in the middle.
You know, the easiest way to visualize this is to think of them as little formations on your chart. An up fractal looks like a tiny peak, kind of like a mountain, and a down fractal, that looks like a small trough or a valley. They're basically just snapshots of a very short-term high or low point.
Okay, so let's get into the exact rules. For a bearish up fractal, that's the one that hints prices might be heading down, the middle candle has to have the absolute highest high of the 5. And the 2 candles on its left and the 2 on its right must have lower highs. For a bullish down fractal, the one that suggests a move up, it's the complete opposite. The middle candle has the lowest low and is surrounded on both sides by 2 candles with higher lows.
And here is exactly what it looks like on a real chart. See those little down arrows? Those are the up fractals, marking the peaks. And the up arrows, those are the down fractals, marking the bottoms. You can already see how they start to paint a picture, right? They begin to map out potential support zones where buyers show up, and resistance zones where sellers tend to take control.
Now, I know what you're thinking. This looks simple. Almost too good to be true. And that brings us to the most important detail about this indicator. There is a catch. But funnily enough, it's a catch that actually makes the whole thing more trustworthy. This was Rohan's immediate follow-up. It's probably what you're thinking too. If the arrow shows up at the peak, but I only see it a couple of candles later, isn't that, well, too late?
And the answer is,
yeah, it is delayed. See, the indicator can't draw that arrow until the next 2 bars have fully closed. It needs those 2 bars to confirm that the middle one was, in fact, the highest high or the lowest low in that little 5-bar group. So the signal confirms what happened. It doesn't predict what will. But here's the twist. Think of that delay not as a flaw, but as a built-in feature. That 2-bar waiting period is actually a filter. It's what stops you from jumping at every tiny, meaningless price spike. It forces you to wait for the more significant, confirmed turning points. It makes the signal more reliable.
Okay, so we know what a fractal is, and we understand why it has that little delay. Now we get to the really important part. How do you actually take these things and use them in a real-world trading strategy?
so at the most basic level, you use fractals as reference points on your map. A string of down fractals can help you draw a line where buyers seem interested. A cluster of up fractals can show you a ceiling where sellers are strong. Over time, what you're really doing is identifying zones where market psychology, that classic battle between fear and greed, tends to repeat itself.
But here's where this gets really interesting. You combine it with another tool to understand the bigger picture. So for example, let's say the price is in a clear uptrend. It's trading above its 50-day moving average. Then you see a bullish down fractal form. That's not a signal that the whole trend is reversing. No, it's highlighting a potential chance to buy on a temporary dip inside that bigger uptrend.
And this is maybe the most critical piece of advice from the whole conversation, this time from Tanya, the most experienced trader in the group. You never ever use the fractal indicator by itself. Why? Because in a messy, sideways market with no clear trend, you'll get fractals popping up all over the place, giving you one false signal after another. It needs a buddy, like a trend indicator to give it context.
All right, let's bring this all home. The real secret to using fractals isn't just about understanding the 5-bar pattern. It's about having the right mindset when you see those little arrows pop up on your screen.
So here's the final scorecard. The pros, they're super easy to see, they're great for beginners, and they do a fantastic job of visually marking potential support and resistance. The cons? They lag.
They can show up way too often if the market isn't trending. And, this is the big one, they're absolutely not a standalone trading signal.
And here's a massive pro tip for you. The reliability of a fractal signal goes way, way up as you increase the time frame. On a 5-minute chart, you're going to see a ton of noise. But a fractal that forms on a 4-hour or a daily chart, now that represents a much more significant shift in the market. And it's something you should definitely pay attention to. By the end of the night, it finally clicked for Rohan. This is the best way to think about them. They are guideposts, not traffic signals. An arrow isn't a red light telling you to sell or a green light telling you to buy. It's a yellow sign. It's a heads up that says, hey, pay attention. A potentially important turn just happened right here.
And let's end on this thought because it really gets to the heart of it. What are fractals actually showing us? Well, they're like footprints left in the sand by the market's collective emotions. An up fractal? That's a map of the exact spot where fear took over from greed. And a down fractal? That's where greed finally overwhelmed fear. And learning how to read those footprints? That's a huge step toward understanding the market's story.
If this video helped you, hit subscribe so you don't miss what's next. Like and drop a comment. Your feedback keeps me going.